All right, gang, let's get a quick audio and video check in for our charts. And today I did not forget my coffee. Charts and coffee. Good morning. Good morning. Good to see you all. Good morning, gang. Excellent. All right, so let's get to it, shall we? 5x5. Love it. Love it. All right. Welcome to my office. If this is your first episode of Charts and Coffee. And all right, let's get to it. So one of the questions, and by the way, I do put my text up here. You can. I've been experimenting with questions via text. I like nice, succinct emails. Succinct questions are easier to get back to you guys quickly. So experimenting with text. Feel free to use it. I am a little behind, so if you have emailed or texted me, I kind of played a little bit of hooky around Thanksgiving with my little sister in town and had a really good time with her. So I am catching up with that. Angel, how are you, my friend? Oh my gosh, we miss you too. Hope everything is good. Oh, great to see you. Oh, that just made my day. All right, so let's get to it. One of the questions that I've been receiving a lot of is, okay, Rag, we get that you trade futures and currencies, but what about stocks? Where do stocks fit into your trading approach? So let's go ahead and take a look at, I'm actually going to jump into a website with you guys. So let's do this. We're going to head on over to two sites. The first is going to be Sector SPDR. Sector SPDR. Now, this is a site where you can take a look at the pre-curated list of ETFs. And this is what we talk about a lot of times in the morning, because so much of what we're trying to do in the morning is, well, what do we want to trade? That's first. That's always first. And second is, how do we want to trade it? So when I'm looking at what over the past, say, month, what over the past, say, 3 months has been a relative outperformer, one of the things you'll see surging the last month or so, and actually you can go back for the last quarter, is the rotation into energies and financials. You'll see that. You'll see industrials last 3 months, materials, basic materials last 3 months. These are your top 4 names, followed by XLU. Once you determine that, you can then click on that and see what the relative outperformers have been and prioritize them according to the percentage change, or however you want to do it. Really, I would prefer that you guys look at the percentage change for strength, because that's going to be where your most bullish names are, that you can either play momentum breakouts with volume confirmation with, or you can focus on buy the dip opportunities. Okay, so with that being said, that's one way to do it. Now, another way to do it, and it's still going to be rooted in my preference to focus on those stocks that we know are guaranteed attention more consistently. I don't mean trying to find the needle in the haystack that's going to have a rip on a day or two, right? That's a different kind of trading. It's not impossible, but it's not as simple as looking at these pre-curated lists where we're pretty much guaranteed attention. And that's where we'll head on over to ETF DB. All right. And we'll go take a look at 2 particular ETFs. One is the FFTY. This is your IBD. Look, before there were Robinhooders, I know I'm probably going to tick a whole bunch of people off, but let's be honest about it. Before we were looking at Robinhood lists of where the attention is, where the flow was going, there was the IBD 50. One of the easiest trades back in the day was what gets added to the IBD 50 and what gets taken off the IBD 50. And there's going to be a lot of attention with that. No knock to IBD. I'm talking about the behavior around the list that they have curated. And there's credit to IBD. They have a huge following. And the stocks that are mentioned on their website, the stocks that are in their their innovator fund, the stocks that are on that IBD 50 list are going to be closely watched, and there's going to be attention. And take a look. These are the top 15 holdings in that IBD 50. And all of a sudden you're thinking, oh, right, I've been hearing a lot about Fizz and ServiceNow and Viva and Crocs. There it is, right? So as long as, for me, as long as there is a decent open interest on the expirations, I don't mind playing any of these names. In fact, TTD, Etsy, NVIDIA, PayPal, Crocs, now Fizz, these have been Amazon. These have been quite popular. West Pharmaceutical is down here. So sometimes I'll hear about a name that I know is not necessarily associated with one of the more sector SPDR type names. And I'll think, well, where is that coming from? Where is the interest for that actually coming from? And a lot of times what you'll realize is it's coming from the FFTY. It's coming from that Innovator 50. It's coming from the IBD, that IBD list. Okay. All right. So with that being said, that's another place that I'll go look for sort of non-futures related, non-tethered, and spend some time looking at where the double green is and something like FFTY. And another one is the IPO, Renaissance IPO ETF. Nice list of names here. Really nice list of names here. Click on holdings. This is the ETFDB. And you'll see Moderna, Uber, Zoom, Pins, CrowdStrike, Work. Oh, yeah, we've been hearing a lot about these names. These are shiny IPOs, gang. And then this is a great way to take a look at some of these names. And if you're looking for attention, which to me is a predecessor for a setup and for movement, you want to think about these pre-curated lists. Okay. All right. So I hope that answers a question that I get quite a bit. Where do I look outside of those names that are heavily weighted within the sectors and the indices of the futures contracts? And that's how I do it. All right. So let me grab some questions here. And yes, good morning. Good morning. Let's see. Bear with me again. I'm scrolling down all the good mornings. And yes, good morning. Put call ratios, Jeremiah. So this is the way I look at a put call ratio. I look at a put call ratio as, in many ways, a weather report. It's going to suggest whether or not I should take my umbrella, whether I should dress warmly and bring a jacket, or whether I should dress for warm weather. It's going to give me an environment, right? For me, it's not, again, for me, it's more of a directional bias type tool where the market could be indicating certain tendencies could be coming soon. I don't think it's a trigger in terms of timing, right? I think it's more of a tool that gives you an environment to pay attention to. And there's a lot of really interesting put call. In fact, I was reading, for some people, they'll use this as contrarian signals. I think it wasn't, but let me see when this article was dated. Yeah, this is the 15th of October this year. So just 2 months old. And at that point, this particular author was writing about how the put call ratio was tracking near 20-year lows. And again, it references the number of put options held by investors versus call options. All right. So investors, the interpretation of that is investors will typically buy put options for protection, and they'll buy call options to be directionally bullish. And I think a lot of people think the put options are a directional play, but mainstream investors don't necessarily think short. They're usually either trying to hedge or they're trying to play directionally long. So the high number of puts aren't necessarily bets on the market moving lower. It's more like a seatbelt that mainstream investors are putting on an airbag for their portfolio. So when those balances change, right, when they shift or they're at significant highs or lows, or they're beyond certain barriers of a mean within the put call ratio, That's reflecting shifts in positioning, but more importantly, shifts in sentiment. Okay. So to me, it's that sentiment. It's more like, what do I think the weather's going to do? It's gorgeous out here in South Florida. What is the weather most likely going to be like? How should I dress? Right. In this case, how should I prepare for a particular market behavior? Okay. So thank you for the question, Jeremiah. Are the trade flags a free indicator? They are, Guy, and yes, they are through the website. I mean, mainly what I do for my community in the simpler futures room and the options room and in my sector secrets mastery, what I do is, in order to support the tools, I usually make them available to members because that way I can walk them through how to set them up and if I have brand new updates. So yes, they're free, but they're part of being part of our community. Although I have a lot of tools that have nothing to do with being part of our simpler community. I mean, you can pick up a number of my tools free on the interweb, and I've shared a link, Raghee's Ultimate Toolkit, which has my tops tools, Wave, Grab, Darvis, Propulsion, and you can get that and put that on TradeStation, Thinkorswim, and TradingView. They're also available on AT Charts. I just did a webinar for the folks over at Infinity on their new AT Pro charts, and gosh, the indicators look great. It's super simple. It's much more akin to activating an indicator on, say, TradingView. So there's a lot of, I know they're available on Ninja as well. A lot of people have taken the indicators, which is fine. I've always made it open source, and it's populated across many platforms. All right, let's see. What do we have going on today? Well, yeah, we'll take a look at what kind of gap psychology we've got. I'm still bullish, gang. I mean, I don't go into the morning thinking, well, we could do this or we could do that. Nobody knows what the market's going to do. So asking me what I think the market's going to do, I don't even ask myself that, as if the crystal ball exists. It doesn't. But what I will say is that I have bullish bias. And I've had this same bullish bias now for pretty much exactly a month. Because once we're trading above certain key anchored volume weighted average price levels, and now we have double green on the broader indices, yeah, I'm bullish. So it's not a matter of what I think the market's going to do. It's really a matter of if we trade down to certain lows, can I go ahead and be a buyer? And that's really what I want to be thinking about in a number of markets. Clearly the broader averages are going to start the conversation. Then I can just get more and more granular. So yeah, absolutely. I'll be looking for lows, likely around just about 2 standard deviations below price. I'll be looking for lows in that area. All right. What are the green and red boxes I have in the upper left-hand corner of my charts? Those are what I call trade flags, Jim. Those are trade flags, and they're monitoring a number of things, whether that be the reading of a certain indicator, whether that be the range of the clearing or opening, or whether that be the structure of or relationship of the 8, 13, 21, and 34 EMAs. So it's the exponential moving averages that you're probably seeing on those. All right, next up is what's my opinion on bonds? I'm generally bullish bonds. We've talked about that. Bonds, gold. I'm generally speaking bullish bonds, but I need bonds to move back down. So we're talking about TLT, ETF, or the ZB futures contract. And I'm looking for the market to head right back down to the value area low for the year, which is really going to be starting at about 171.30 and extending all the way down to 170.20 on the ZB. Now, in that range, I'm open to buying TLT calls. All right, so let's see. Hey there. You love ETF? Me too. I agree with you. How do I invert the colors? Oh, I use a free little plugin called Dark Reader. Yeah, I don't like the white because I used to use white charts. And when I used white charts, I used a white background website, which is how most of them come. But once we went to dark background charts, which is easier to go with the dark background on the sites. And so I use Dark Reader to do that. And it works really well on nearly all websites. Every now and then you might have to tweak some of the settings, but yeah, I love Dark Reader. It's free, it's fantastic, and it inverts The colors, you bet, you bet. All right. Next up is, hey there, Sachin. Great video from last night in the futures room. Thank you very much. How did the options on CL settle? You mean as far as expiration and so forth? I mean, I'm not in CL yet. So the question is about crude oil. I would like to be a buyer, and I'll be a buyer in RBOB, UGA, ETFs if we pull back, and CL. So as far as the position I want to take, it'll basically be using the options on the CL contract as a proxy to actually buying the CL contract. Now you could buy the CL, no problem with that, but I'll likely focus on the options, maybe as shallow as 43.5. And I'll start focusing on the underlying CL futures contract getting long, probably closer to 42. Okay. So I like to be out of those options at ideally about a week before they expire, definitely 48 hours before they expire. So I'm not hanging around for first notice date ever. Yeah. Okay. Next up. So you want to be out really about 48 hours before, or 2 sessions before first notice date. All right. Does the fact that the FFTY is thinly traded? So Alex, I'm not really playing the FFTY. The FFTY is a really good alternative for those of you that may not have an IBD 50 subscription, investors.com, which is a great subscription to have if you're primarily a stock trader. But FFTY is just an easy way to look at what's in that IBD 50 without having to go to IBD. That's really it. So I'm not playing FFTY. I'm looking at the stocks that IBD has curated that will go inside that FFTY. So I hope that makes sense. And we know that IBD 50 is influenced by the followers of that site, of that service, and that's a big following. So I'm not necessarily concerned that we don't have a lot of volume on that. No, not at all. Okay, next up is, do I have classes for trading currencies, or do I use the same setups? Solomon, I use the same setups. Yeah, there's some things specific to currencies, whether that be the futures market or the Forex market. There's a few things that are specific to currencies that I do pay attention to, and those are things like contrast, because whenever you're playing currencies, you're always buying one currency and selling another. And a lot of times traders forget that when they're playing, say, the Australian dollar or the pound or the Canadian dollar, they forget it's actually the Aussie versus the US dollar, or the Canadian dollar versus the US dollar, or the pound sterling versus the US dollar, all three of which I'm long in, actually. All right. All right. So next up is, you're in Abu Dhabi? You're in Abu Dhabi right now? Oh gosh, let me know when you're back. Yeah, let me know when you're back stateside and you're back. Yeah, shoot me an email when you're ready, my friend. Yeah, I'll love to hear about your adventures over there, for sure. So good to see you. How can I get the V-score intraday? So Esteban, the V-score is something that I created back in 2008. I got curious about pulling Z scores on a number of indicators, whether that be stochastics, MACDs, and yes, volume weighted average price. So it's just a Z score pulled on a volume weighted average price. And that's something we make available in the Simpler Trading indicator store. But it's not just that indicator. It's intraday, end of day, anchored volume weighted average price, and anchored volume profile. So it's a trio of tools. And it actually also includes the V-score bands. So the bands that plot where the standard deviations are on your chart. So all that's in that one kit. And then it has some explainer videos and so forth that come with it. All right. Rich, I don't know when. I'm sure it is eventually going to be available on AT, but not yet. Yeah, it's just a matter of, again, every platform has its own API, or it has its own language, and then taking the code and yeah, it's a process, but I think it's in process. Yes. Okay. So, and just like that, that 20 minutes flies on by. So I'm going to try to do my best to give you guys a little bit more insight into some of the watch lists and so forth that I've got my eye on. Again, gang, let's stick to the long side of the market. We've got non-farm payroll coming up tomorrow. We've got all that Powell testimony behind us. And we actually have some rather open seas this morning that are fairly economic event free. I am not looking for gap psychology on the ES. I'm not looking for gap psychology, maybe barely on the NQ, which by the way, all that means is we'll expect a little bit of weakness. And I welcome that weakness. Bring it, because what that means is I'm going to have the ability to see a potential fade, which would be an aggressive setup, actually ultimately get me down to levels that I would like to be long from via my V-score or my HPMR levels. In other words, let's get down to either volatility or volume support levels. This is the way that I view it. Let's get down to volatility or volume support levels and be buyers at that level. Or if that doesn't happen, we don't get down to those standard deviations of support, I'll look for the clearing range to form, to breach, to retrace, and then I'll engage in that way. But it's long and long only for me. All right, gang, it's time for me to head on over to my day job over at the Simpler Futures room. So I'm going to go log in there. If you want to join me, you can join us. I think we've got a trial still available. I think if you just go to simplerfutures.com, you can check that out, or just head on over to Simpler Trading. You could sign up for the free newsletter, see my nightly analysis and all that good stuff. But in the meanwhile, enjoy the rest of your day. Time for me to get to work. I will see you all tomorrow, 9 a.m., same time, same station. All right, gang. Thanks as always. Have a great day. Be good to each other.